Hey everyone, I hope you're all doing well out there. This is your November market review. So, for those of you that have never watched these videos or are newer watching these videos, the reason that I put these videos together each month is to give my clients the straightforward information about what's going on in the stock market, the economy, and then ultimately how that affects their investments that I'm helping them with managing. What I do within the review is just kind of go over some of the highlights of things like changes that I've made within portfolios, which there's a couple changes that I had made just this week that I'll go over with you right before the Thanksgiving week, if depending on when you're watching this, as well as just a couple other charts that I've come across that I think are kind of just good charts to talk about where the market's at right now and give you a little bit of what my thoughts are on where the markets are at and where I think that they're heading. So the first chart that I have here to pull up is just a chart of the S&P 500, looking at the rate of return and the fluctuation of the S&P 500. Using the rate of return here since the beginning of the year. It's up just about 16% here as of Thanksgiving Day. So markets obviously really well. Long-term averages for the S&P 500, you're in that 8 to 10% range over the long term. So we're kind of getting spoiled here over the last 3 years with market returns well into the double digits, with this year being 16% in the last couple years, being 20+%. So definitely a great thing to see. One of the things a chart that I came across that I kind of keep an eye on. It's not really just something I came across, but something I look at, periodically to see what investors are thinking of the stock market. Is there's a survey that's taken each week. It's the American Association of Individual Investors, the AAII members survey. It really, what it's doing is it's asking these people what direction they feel that the stock market is going to go over the next 6 months. It asks if they're bullish, neutral, or bearish. Bullish, obviously, meaning that they're positive towards the stock market moving higher. Neutral, meaning kind of more indifferent. And bearish being a little bit more negative on things, thinking that stocks may go down. So typically, this is looked at as a little bit more of used in a counter sort of investing way, where if the market is really bullish, generally that's a sign maybe to look at this and be a little bit more hesitant on investing in stocks, at least in the short term. If markets are very bearish, also a sign maybe it would be a good time to maybe invest some money. The best time actually to invest money when at least using this data though, is looking at it when there's a high amount of people in a neutral spot. So that's really the best time, because that's just a sign that people aren't looking at the stock market negatively or positively, that they're just kind of indifferent almost on it. So right now we're definitely more on the bearish side of things. You can see the averages there, at least the historic averages. We're definitely a little bit more on the bearish side of things, with a lot more or a lot higher percentage there, a little bit less in the neutral spot. Obviously, looks like that's shifted over towards the bearishness side, as well as a little bit less in the bullish side. So this is taken every week, fluctuates every week, obviously. So just something I kind of was interested in, mainly because of the fact that we've had a really good year in the market, and the fact that there's just so many people that are bearish is kind of a nice sign to see that there's still a lot of negativity out there, because that means that there's actually more room to run, which actually ties into the next chart that I pulled up, which this is a chart looking at the consumer sentiment index that the University of Michigan, I think it's ever since 1987, they've been tracking the overall sentiment based on consumers, and they have this index that they use to track, basically how people feel about the overall economy. So it's more of an economic indicator or survey, versus the other one was based on just the stock market. So this one, looking back over the last 10 years, We've hit a 10-year low here, kind of tying us where we were back in June of 2022, which when I look at that, and especially some of those big drops, you can see the big drop back in 2020. That was obviously COVID timeframes, which, rightfully so. There's a lot of people pretty negative about the economy at that point. But back in 2022, what was happening is that interest rates had really started going up because the Federal Reserve had started raising interest rates. That was also when inflation was peaking at that 9% headline number, and that was obviously a very negative thing because you heard all over the media about grocery prices and all the different aspects of inflation just kind of going across the board, really affecting everybody. So not surprisingly that was a low point for the consumer sentiment. But it also, not that it was a low in the stock market, but it wasn't very far off of a low in the stock market for 2022. That happened in October of 2022, just a few months later. So, and then, COVID timeframe when there was that big drop in consumer sentiment, that was March of 2020. Also a really good time to have started investing in the stock market. So when I see that, again, hitting this, extreme kind of low spot, I look at that actually as more of a positive thing, because there's so much negativity out there that it just looks that there's a lot of potential for upside surprise, basically. So couple charts I thought were just interesting to look at from, I take more of the half glass full type view typically because long-term stocks are moving higher. So things like this only give me positive signs to look at and look for. So, but that also, ties into a couple trades that I've made here recently. So if you're a client of mine, one of the bigger trades that you've seen, if you're looking at your accounts, you can pay attention to it. If not, that's okay. That's why, I'm your advisor, so that way you don't have to worry about it. But one of the trades that I made for one of the more aggressive portfolios that I manage, it's what I refer to as sector rotation. It's a strategy that is really just all stocks. It's an aggressive strategy. One of the positions that I've added to it is a Bitcoin fund. So this tracks the price of Bitcoin. No, you do not actually own Bitcoin. You own a fund that tracks the price of Bitcoin. So, I've had a couple people reach out and ask me about that specifically, if they now own Bitcoin or, things around that. So you don't own Bitcoin, you own something that tracks the price of it, which really is what we're after here. So the reason that I added that to the portfolio, for those of you that have had money invested with me that are actually more conservative, I've actually had Bitcoin as part of your portfolios if you have an IRA with me since 2022. So, I had started buying Bitcoin at that point when Bitcoin was around 40,000 after it had dropped from a peak at that point in time back in 2021. I'll pull up a chart here. This is a 5-year chart showing the price of Bitcoin. So originally I started buying Bitcoin back in 2022 when it was around this $40,000 mark, kind of that middle time of 2022, after it had dropped off close to 50% from the highs in just under 70,000. So timing, not perfect for it, but then obviously it continued moving down. I continued rebalancing and buying more on the way down. The price ended up dropping into the mid-teens at the end of 2022. The average price that I had gotten around that time frame was like 25,000 on a fund that tracked Bitcoin at that time. So then we had a really good 2023 where things really rebounded a lot, right back to that $40,000 level. I ended up being able to sell some of that position the beginning of 2024 as things really took off. For those people that were invested in that, they had seen more than a doubling aspect of it. There's another doubling again of that. So if you've been in a more conservative portfolio with me, you've been a really big benefactor of this, which it's been, on one end, I love the fact that I've had clients that are benefiting from it. On the other end, being that Bitcoin is a more aggressive type of asset class, or cryptocurrency as a whole as an asset class is very aggressive. Bitcoin is the largest cryptocurrency within that asset class. I wanted to get this invested in, or wanted to have a portion of this invested in the most aggressive strategy. It just hasn't given me a great price point to do that over the last few years, because every time that it sits sideways, it doesn't really go down very dramatically, as you can see in the chart there. There's only been a couple times that there's been bigger drop-offs, and then it's just led to further highs in the near future. So with the drop-off that we've had recently, it was at 125. More recently, I bought it around 88,000 was the price that Bitcoin was at when I bought the fund tracking it. Today it sits at about 90,000. That's almost an insignificant move. So, but I bought the part of the portfolio that I bought. I used 4% of money in that strategy to put that to work in Bitcoin, taking that away from a few other different funds, which I'll go over in a second. The idea behind it, though, is that I bought that as a initial position where very likely, if Bitcoin does continue dropping, I'm going to buy more of it. So just know that if you have questions about it and you're thinking, you had questions, that's a little bit more of my mindset and why. Reason I bought it at 88 is because there's a support level there in the 80,000 range that we had hit back in the March-April timeframe after the tariffs were announced, then rebounded higher from there. The next level would be in the 70 range, which there's another support level there that acts as like a kind of just a natural spot where there's a lot of people that had bought at that point that are likely to buy in again. So, and that's what creates these what are called support levels. So, it hit it had gone down all the way down actually to 80,000 on an intraday basis a week before Thanksgiving, and then it's rebounded about 10% since then. So that's one of the reasons why I had bought it at that point in time. So that's a little bit of insight on one of the bigger changes within the portfolio, relatively speaking. That's the biggest change within the last month. So the next chart that I have here goes into a little bit more detail, looking at some of the other positions that I had sold to use the money for that to buy the Bitcoin strategy. So in this chart here, you can see that in the top ledger there, you see Bitcoin prices. This is a 6-month chart going back over the previous 6 months. Bitcoin prices are down 19%. Healthcare in that time frame, which of the 4%, I took 2% from healthcare. So selling a position that's up 15% in the last 6 months. The S&P 500, which I don't have in this chart here, that's up 5% over the same time frame, just to give you kind of a good benchmark to look at. Relatively speaking, most of that's come because of technology. Large chunk of that more recently has been healthcare, but the other two areas that I had taken a percent from is financials and industrials. They've been relatively flat. Really, the idea behind there is that I didn't want to take too much from industrials or financials, but the money needed to come from somewhere because it just created a better opportunity to buy at a lower price for Bitcoin. So those were the other two positions that had to shed a little bit to support our buy there. So that was just some of the internal tweaks going on. So you would have seen all of those trades if you're a client of mine. You've gotten trade notifications, emails, whatever it would have been to notify you of the trades. So if you saw that and you're wondering like, what's Dan doing? That's what Dan's doing. So just making trades there. Obviously, we'll follow this, and I'll kind of update you guys with this over time as well. So other trades more recently was the energy trade, getting rid of energy within the sector and buying semiconductors back in September. That's done really, really well and continued to do well, especially versus energy, which is basically flatlined from where we had sold it at that point. So just to kind of give you a quick update with that one as well. So I know I'm going to be seeing a number of you in person. My Pennsylvania people that I see in person, I'm heading up there for a couple weeks. So I will see a number of you, so look forward to that. If you have questions and you'd like to get in touch with me about your portfolio or anything like that, being that I'm doing a lot of in-person meetings and kind of doing my road tour up in Pennsylvania, I'll have some time to do Zoom meetings. more towards the end of the month will be a lot better for that. But always feel free to call or text me if you have questions. I'm definitely available to answer any questions that you have. If you have anybody you think would be interested in having a deeper conversation with me about their investment portfolio and helping them make more money on it, I'd be more than happy to chat with them about that. Just get me in touch with them, as you're talking with people. So, but if we don't chat here over the next month, I hope you all had a happy Thanksgiving, and I wish you guys a Merry Christmas, and we'll connect in the New Year's then. I appreciate you all taking the time to check me out. Until next time.